Hi, this is mfeder here with Pacific Home Mortgage Funding Incorporated, and today I'm going to talk about whether or not it makes sense to pay discount points in order to lower your monthly payments on a home loan. Hi, so a lot of borrowers ask me, especially when they're doing a first-time home purchase, does it make sense for me to pay a little bit extra towards my closing cost or discount points so that I can save some money on a monthly basis? And my answer, like everything in mortgages, is it depends. So what you want to look at is if you paid, let's just say, an extra $3,000 in discount points and you were to save $60 a month on a monthly perspective, you look at that and you say, you know what, over a 30-year time period, if I've saved $60 a month over 30 years, I'm going to be saving upwards of $20,000. But that's kind of oversimplifying the calculation. The correct way to look at it is you say, you know what, if I'm going to save $60 a month, but it's costing me $3,000 extra dollars, I want to take the $3,000 of extra cost and divide that by the $60 a month to come up with the number of 50, which is what's called my payback period. And what that means is that if you paid the extra $3,000 up front when you close a loan and you save $60 a month, it would take you 50 months to recover that $3,000, or basically 4 years and 2 months. So people ask me often, like, what's the correct payback period? It depends on your situation. So if you were a first-time home buyer buying a one-bedroom condo and you thought you were only going to be in there for 3 to 5 years and your payback period was 4 years, I would say, you know what? I don't think it really makes sense for you to pay extra. I'd rather just take the deal as it is and have you save that $3,000 because you're not going to be in the loan for long enough to really recoup your extra investment. If you had a 2-year-old child at home and you were moving into a neighborhood because the elementary school was good and the junior high was good and the high school was good, you've got a reasonably good chance that you may stay in that home for the next 16 years. So in that case, if you were in that home for 16 years and you saved $720 a year, which is $60 a month, for 16 years, you're saving upwards of $10,000. You spent $3,000 up front. You basically tripled your money. So I would say, you know what? That's not really a bad deal. If you want to evaluate your particular situation, please feel free to call me at 858-337-1520. And thank you again for tuning in.